Whether you're a beginner in trading futures or just want to learn more, I'm going to show you a trading platform that allows you to start trading futures in minutes with a demo account to practice before you start investing. Hey Bowtie Nation, Joseph Hogue here, and futures trading has always been one of my favorite tools for hedging risks in stocks or just playing the upside in themes like energy and gold prices. In this video, I'll get you started in futures trading with everything you need to know, including strategies and how to practice without risking your own money. Futures are just an investment contract between a buyer and a seller to transact in an asset like a currency, an oil, natural gas, or corn at a fixed price and time in the future. Farmers have been using futures since as early as 1697 in Japan to reduce their risk in crop prices. In the 1840s, Chicago became the center of the global futures market, where the Chicago Board of Trade and later the Mercantile Exchange opened the market to buying and selling. For example, on the CME website, we can find trading in agricultural products like corn, wheat, and rice. If a farmer is expecting to harvest 145,000 bushels of corn in September, and you better believe this Iowa boy knows, that farmer has a lot riding on that crop. So he might want to go into the corn futures market and sell 29 contracts for 5,000 bushels each to another investor. You see here, we have different dates that contract is deliverable and prices for each. These prices can change on factors like interest rates, storage costs, and yields, as well as just the normal supply and demand for corn. But by selling those 29 futures contracts for September corn here at $5.08 per bushel, the farmer has just locked in his price on his harvest. He doesn't have to worry that prices could crash from now until September. And on the other side of the trade, buying those futures contracts might be a company like Kellogg's to lock in its price for corn on its production needs for cornflakes. So a lot of this risk hedging goes on in the futures market, but it can also be a great way to make money on the direction of everything from the price of oil to copper, gold, interest rates, and even the stock market. In fact, investing with a demo account on the Plus 500 platform, I built it to a $16,000 paper profit on 2,000 enclosed trades and an unrealized $14,000 profit. Now, I don't want you to rush into futures trading thinking those results are typical. With the kind of leverage available in futures, the risk of loss is just as high. So I want to reveal the pros and cons of futures as well as some trading strategies. I'll be using the Plus 500 app for futures trading strategies later, a futures platform where you can trade Forex, crypto, stock indexes, and even commodities. More than 24 million users in over 50 countries have already started using Plus 500, a FTSE 250 company listed on the London Stock Exchange. Plus 500 knows futures and knows that low cost is what's important, with low commissions, no platform fees, or live data fees. You'll get live alerts, stop loss features, and access to advanced charting to make your futures trading profitable. Best yet, especially for futures beginners, Plus 500 offers a free demo account to practice trading futures with live quotes before trading your own money. It literally takes less than a minute to start practicing trading futures, and the app makes it easy to find contracts, research, and place your orders. If you're unsure about how to get started, this demo account is perfect for you. I'll get you started on futures trading here, but you'll also find videos and articles on the app and everything from basic futures trading to strategies. Use the link I'll leave in the description below, and Plus 500 will give you a bonus of up to $200 when you make your first deposit. Now, for the beginner, there might not seem like there's much of a difference between futures and options. I use both, but the differences here are enough that there's instances where you'll want to use one and not the other. Both futures and options contracts are derivatives, so the price follows that of an underlying investment like a stock or a commodity. They both have expiration dates, a day in which the contract will stop trading. The difference, though, is that for options buyers, the investment represents a right to buy or sell the stock, but not the obligation. In futures, both the buyer and the seller of the contract are obligated to close out that contract, either by buying or selling the commodity or the futures contract before expiration. Futures also tend to be more liquid, meaning you can buy and sell quickly, and the price difference between buyers and sellers isn't as much as with options. Futures also don't experience that time decay like options, where the premium will decrease as the option gets closer to expiration. I'll reveal those futures trading strategies next, but it's important to understand those pros and cons of futures. On the plus side, futures allow you to use more leverage in your investments than you could with stocks or even options. Each futures contract for corn represents 5,000 bushels. At the current market price of $4.87 a bushel, that would be over $24,000 just for one contract, but you need less than $2,500 to start the position, and every 1 penny change in the price is a $50 change in your investment. We can see here in the price chart for September corn, the price was as high as $525.7 in October. So if you bought now at $507.6 and the price went back up to that point, you'd be sitting on a $900 profit and nearly a 50% return. Another benefit here is that futures can be a great tool to reduce risk, not just for farmers and corporations, but investors as well. I'm going to detail this in one of our investing strategies next, but let's say you've got a lot of oil stocks in your portfolio, but you're worried that OPEC is going to flood the market with oil supply and kill the price of crude on the short term. Well, one way to cut your risk without having to sell your long-term oil stocks is by selling a futures contract for crude oil. So then if the price of crude oil does fall, the money you make on your futures contract is going to help cover some of the near-term pain in your oil stocks. Now, as we say here on the channel though, it ain't all rainbows and unicorns. There are downsides to futures trading, and top here is that leverage can work in reverse. That same $50 change in your investment for every penny change in corn can wipe out thousands in profits. That's the one reason why I rarely use the full amount of margin or leverage on a futures trade. I was investing in gasoline futures back in 2011, shorting gasoline on the idea that the price was just too high. I woke up one morning to see my account down thousands of dollars after a refinery had exploded in Canada, spiking gas prices. Another downside most beginning traders don't think about is the emotional strain futures can cause. Futures trading is nearly 24 hours a day, 6 days a week. It varies by futures type, but trading is generally from Sunday 5 p.m. to Friday 5:45 p.m. at Central Time. Now, that kind of around-the-clock trading might sound great until you find out you can't sleep because you're waiting on the consumer spending numbers out of China at 3 a.m. because it might affect your portfolio. For all the downsides though, futures trading is a great tool that every investor should at least know how to use, and I want to share 3 trading strategies to consider. With these, I want to focus on that big picture idea for each strategy, and I'm going to start with my favorite way to use futures to reduce risk in my stock portfolio. For example, if I want to hold on to my long-term stocks, but I'm worried that the market has run up too high too fast, I can sell futures on the S&P 500. That way, if the broader stock market does fall, I'll make money on the short futures trade to offset the pain in my stocks. That massive drop on the yield of the 10-year treasury since mid-October is a big factor in higher stock prices. So if I'm worried that that yield might bounce back up, I can offset the risk to stocks by buying futures on the 10-year yield. Another way you can reduce risk is through the related commodities to your stocks. You can reduce the risk of higher jet fuel prices to your airline stocks through buying oil contracts, or maybe reduce the risk of your Coinbase stock tanking by selling Bitcoin futures. One trading strategy that we don't cover much here on the channel, but is critical for many futures trading, is technical analysis. This is where you're using charts and price patterns to help determine where the price might go next. A lot of traders like this because all you need are the charts and a knowledge of the patterns. There's no deep fundamental analysis involved, and the time you're in a trade is typically less than a day rather than letting it sit overnight when some unforeseen event could happen. Another strategy I've used with futures trading is called swing trading. This is where we use that fundamental analysis on supply and demand, the economy, or other factors to find those turning points in the price of an asset. Say you think the Fed is going to cut rates sooner than expected, but inflation is going to continue to rise. That would be a positive for the price of gold, so you might buy gold futures. That's going to be a longer-term focus than technical analysis, even holding a position for up to a month or more, and relies on that fundamental analysis. Less than 10 minutes is not much time to explain futures trading, but the best way to learn is just by doing it, and the demo account on Plus 500 is an easy way to do that without risking your own hard-earned money. You can use any of these strategies we talked about, and the demo account gives you the charting to follow price trends along with that other technical analysis. Use the videos in the platform's Futures Trading Academy for more on each strategy. Once you've found a trade, you can place limit, market, or stop orders to fine-tune your pricing, and the demo account starts you with $50,000 to test out your ideas. Trade in dozens of commodities and assets, including cryptocurrencies, stock indexes, rates, metals, and practice futures trading before you start. Test out futures trading with the demo account on Plus 500 and get your bonus cash with the link below, or click on the video to the right for a 12-stock portfolio for dividends every single week. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.